Hi everybody, Brian from Bearable Traders here. It is Saturday, October the 8th, and hope everyone's having a good weekend so far. We are doing the weekend video here, so let's take a look at what happened last week and then try see where we're going to be going next week here. Another exciting week, and we got kickoff of earnings season, so let's get down to it. And as always, we'll start out with week in review, see what happened last week. So if you remember back to Monday, Tuesday, we had a massive, what I would consider to be a short squeeze rally, another bear market rally. We were really oversold, and I had mentioned on last week's video, I thought we were going to get a rally. I didn't really see the 2-day monster rally that we got, but nonetheless, there was a rally there. Of course, Thursday we started to sell off, and then Friday really took a hit with the employment report and the lower employment rate, rising wages, and still strong job growth, even though it did miss by a little. And we really took another big dip lower on Friday. And of course, it didn't help that AMD came out with a real negative sort of pre-earnings announcement warning about their dropping sales, and the semiconductor got hit pretty hard. And of course, FedEx also had a warning about global slowing. So again, really feeding into that sell-off on Friday. But you did see, despite the fact that the sell-off at the end of the week there, because of that monster rally we had Monday, Tuesday, we ended up gains with the week here. Dow up the 2%. IWM still doing probably the best of all the indexes again this week. Qs were up just a fraction, of course, with that semiconductor sell-off, and S&P there 1.6%, still a gain on the week. Areas of strength continues to be energy, basic materials. Energy sort of going in a fight there between slowing economy and lower energy consumption compared to the OPEC, which cut output by I think it was 2 million barrels this week, which added to the pressure on energy prices. Real estate and utilities, biggest losers. 10-year Treasury note, again, we edged higher as that strong report came out on employment. 2-year was about the same, and U.S. dollar again strength on the higher interest rates, and Bitcoin again just hanging around that 19.5, 20,000 level. Just seems to be pretty range bound. So before we start looking at some charts here, just a quick ad from my book on Amazon. It's Profiting as an Active Trader. This is my new book, Rules, Strategies, and the Routines of an Active Stock and Option Trader. So let's start looking at some charts. All right, we start out with the bond prices. Bond market's closed on Monday, actually, so it'll be so the market will be trading without any sort of fresh news or fresh moves on the bond market, I believe. And you can see here the 2-year just creeping up a little bit. We still are in an uptrend, still continuing to push higher as people anticipate rates will continue to rise. The 10-year on the weekly, you can see here we edged up on the week, about 1.5%. And again, still in this, firmly entrenched in this uptrend, probably heading over 4 at some point. And so that's obviously going to put pressure on the markets. The stock market. Transports, again, down on the day, Friday, big drop down. Of course, that was part of in FedEx morning. And after these monster rally days, Monday and Tuesday, and big volume days as well, I attribute that to a bit of a short squeeze. One of these incredibly strong bull rallies in the middle of a bear market. We still are in a downtrend. You can see here we're still below the 20 moving average. So again, stalled out there and rejected. And on a week, we were up on the week. We're just flirting around the 200-day weekly moving average, 200 weekly moving average. And the Dow, again, sort of similar chart for the week. 2 days, 2 strong days up, and then a rejection at the 20 moving average, and then two pretty significant down days on the daily. Again, didn't get over 50 on the RSI, and we're turning back down on stochastic, those momentum indicators. Again on the week, up on the week, but well off the high. And again, we're back down testing these June lows, and this prior low right at the end of September. We did seem to hold there, so it's sort of a critical time for the Qs here to see if we actually do end up breaking lower, or if we actually do hold this this low that we put in on Friday, because that could be a higher low from this low, and possible move higher. But I actually think we are probably going to continue lower here, and you can see again stochastics didn't get over 50, RSI turning down again, so I suspect we are going to head lower and break those lows. And on the week, the Q is looking particularly unattractive, let's just say that. The SPY, same thing, we look like we're going to head back and really maybe test those end of September lows. Once again, we're right at the June lows here. It's kind of where we bottomed out on Friday. Again, all the momentum indicators heading lower, and again, kind of an ugly chart, maybe heading down to this 200-day moving average on the SPY. Just because I think that interest rates are going to continue to move higher, because there just does not seem to be any sign of inflation abating, and of course the Fed is not going to stop, even if they do see one sort of maybe good report. Maybe Thursday CPI number comes out better than expected. I don't think that's going to sway the Fed, and they've basically made that very clear. So the IWM seems to be at least holding up the best. We did test these June lows once, double bottom, bounced, and now we're pulling back again. We're probably guessing we're going to retest those lows again. Again, the IWM, we are below the 200-day moving average. The VIX, looking like we're ready to spike up again. Still looking for something in this range here. 35 could be a capitulation, but we really need to get there. The dollar, again, big pullback, but now we've got the bounce back up again after this pretty significant pullback here. Real wild ride on the currencies. And Bitcoin, where's Bitcoin now? 19.5, just seems to be sort of chopping in a range here, 20,000 to 19,000. Tries to break out and then just can't do it. So again, looking a little bit weak here. The weekly doesn't look very positive. We've got a series of lower highs here. At least this may be a lower high. Again, looking a little bit weak there, and we are still in a downtrend. If you want to draw the line on top of the candlesticks. So some stocks on watch for next week, as I always like to watch Apple. Apple's going to be a good trade when we do start to see a turnaround in the market. We could be well away from that quite yet, but I was looking at 150. Obviously, 150 was a pretty critical level right and we broke down prior week, and we had a little bit of a rally back. Couldn't even really get to 150 and then rolled over again. Apple has not really warned like a lot of the other companies like AMD or came out last week and warned. I think that's still on the could be on the table for Apple. We could end up getting some kind of a warning on a reduction in earnings. So just waiting for that shoe to drop. But it certainly is definitely in a downtrend. We couldn't even get up to the 20-day moving average on Apple and headed lower. But again, quality name, 3 or 4 years from now, probably going to be back up. It'd be a good investment, but the question is what time, when to get in on that. EWG, speaking of long-term investments, this again could be a good long-term investment, but again, still waiting on this just to see some kind of a market turn. PINs, it's kind of interesting. I was looking at a number of stocks that were actually performing fairly well. PINs is one of them. When everything's been selling off, we had this big downtrend in PINs, it has broken, and it now is starting to move to the upside. So you can see we're above the 20, and pins this level right here about 25.70, $26. Looks like an area where it could actually start to break out. And there's been a lot of volume in this range. You can see these volume, price by volume, or volume by price candles. So there's been a lot of buying in this range. So a lot of support down here. And as we move higher, you'll get into lower volumes where people are stuck. So I mean, pins could be interesting. We've got the RSI above 50, and yeah, momentum seems to be building on it. And it's one of these stocks that's actually generating some earnings. Rogers, again, I think is really getting oversold here. And I've got a small position. I'll be looking to add to it again very long term. Not trying to pick a bottom on that one either. Just going to be under pressure with the market. And SQQ, I still think we have some more downside. So I think there is probably some potential to continue to be long and trade SQQ in and out of SQQ. Tesla, of course, under pressure because of must deal with Twitter. People I think he's selling shares to raise some more money to make that deal happen, which it probably is going to happen. So this 210 level looks like a pretty significant area for Tesla to hold. So I'd be watching for it to bounce off there. Uranium, I still think uranium has some good potential. Of course, it's been getting sold off for the rest of the market. Just holding on to a small position there. And that's about it. I'm keeping my my powder dry for now for a lot of the swing trades, so we'll be watching for some kind of capitulation bottom in the future. And when that'll happen I have no idea. So wrapping things up, what we're looking forward to here on the week of the 10th. Here's your indexes levels and resistance and support levels there. We'll go through them exactly. In terms of economic events, we've got some interesting things coming up this week. We've got Monday, we've got industrial production. On Wednesday, we've got a lot of mortgage data coming out, new mortgages, etc. That'll be interesting to see how housing is holding up here. Thursday is going to be a big day. We've got this core inflation, the CPI number, and of course everybody's looking for and hoping for some cooling in inflation. But again, just a reminder that one data point is not going to influence the Fed in any way. They've made that very clear, but the markets seem to take any hint of possibility of lower inflation. They run with it, grab it and run with it, but we'll see what comes out there Thursday. Of course, that'll be a big day. Friday, retail sales. That'll be interesting because we'll just see how the consumer is doing here, see if they're still spending. And that'll be another sort of good indicator of what's going on in the marketplace and consumer demand. For earnings, as I mentioned, we've got earnings season starting to kick off here. BlackRock and Delta on Tuesday. We've got Pepsi and Alcoa. Wednesday, we've got some financial institutions, Goldman Sachs and Schwab. And Thursday, and then we really get into it with JP Morgan, Morgan Stanley, Citi, Wells Fargo Friday, and of course UNH as well. That'll be one of your healthcare stocks. So that's it, everybody. Let's see what the week brings. It was a wild one last week, and I'm sure it'll still be volatile in the coming week here. And so we'll see what the market brings to us next week. 8 o'clock Monday morning, we'll be starting the pre-market show. Hopefully you can join us live on YouTube. And then, of course, our members trading the market open on at 9:30 on Monday morning. So we will see you hopefully then. Bye for now.